Welcome to The Explainer. We're coming to you live from the digital trading floor today, and honestly, just look around. The candlestick charts are flashing an absolute sea of green. We are in the middle of a global market shockwave right now. A massive tentative geopolitical peace deal between the US and Iran was just announced, and the ripple effects are blasting through literally every major financial hub on the planet. From energy markets taking a nosedive to global equities hitting unprecedented all-time records, the entire macroeconomic landscape has just completely shifted in a matter of hours.
All right, here is our digital rundown for today. First, we'll look at the geopolitical catalyst. Then, we'll track global equities hitting records, see how central banks are taking the stage, put a spotlight on Indian markets, and finally, chart out the technical trends you need to watch.
Kicking things off with Part 1, the geopolitical catalyst where oil drops on a major peace deal.
Okay, let's dive right into this. At the dead center of today's massive market explosion is that tentative peace agreement between the United States and Iran, and the market reaction? Absolutely instantaneous. Look at this number right here, down 4.9%. That is the dramatic plunge we just saw in front-month West Texas Intermediate crude oil futures, pulling prices down to their lowest settlement since early March. Brent crude mirrored that with a 4.8% drop of its own. It's like the global energy markets just collectively exhaled. The massive fear premium that had been baked into oil prices for months essentially evaporated overnight.
Now you know we have to balance that psychological relief with physical reality. Jay Goldberg over at Seaport Research Partners totally hit the nail on the head. He noted that because the war seems over, investors are suddenly feeling way better about taking on risk again. But here's the reality check. The International Shipping Chamber says there are still roughly 500 ships just waiting to safely pass through the Strait of Hormuz. It's going to take months to clear out that massive backlog and ensure the water is actually clear of naval mines. But hey, markets are forward-looking, right? And today, they are laser-focused on the upside.
Which brings us to Part 2. Global equities hit records, unleashing a tsunami of tech gains.
That sudden plunge in oil prices, it acted as absolute rocket fuel for Wall Street, setting off a global tsunami effect. The blue-chip Dow Jones Industrial Average just shattered records, closing over 51,600. The S&P 500 jumped 1.7%, and the tech-heavy Nasdaq surged a massive 3.1%. If you check out the holographic ticker scrolling right now, AI and tech are absolutely leading the charge. I mean, look at these staggering gains. SpaceX, literally in its second day of trading after a blockbuster IPO, skyrockets 19.6%, pushing its valuation past $2 trillion. Micron Technology surged 10.8%. AMD climbed 7%. And Nvidia, the undisputed heavyweight of the S&P, gained 3.5%. The math is simple. Lower oil prices mean lower inflation fears, giving investors the ultimate green light to flood right back into high-growth assets.
Moving right along to Part 3, central banks take the stage to navigate this wild new landscape.
While the equity markets are throwing a massive party, the real navigators of this macro landscape are stepping up to the mic. And the historical weight of what we're witnessing is just incredible. Today, the Bank of Japan hiked its key interest rate to 1%. You literally have to go back 30 years to find the last time Japan's benchmark was that high. And just ahead of that hike, the Nikkei 225 casually smashed through the 70,000 mark for the first time ever. Now tomorrow, all eyes shift to the U.S., where the Federal Reserve's FOMC meeting wraps up under the brand new Fed chair, Kevin Warsh. So, the million-dollar question is, how does Chair Warsh balance these violently opposing forces in his first-ever press conference? On the hawkish side, May's headline CPI jumped 4.2% year-over-year, its fastest pace since April 2023, mostly driven by energy. Plus, we know Warsh is highly skeptical of giving out forward guidance. But then on the dovish side, this new peace deal and the plunging oil prices we just broke down significantly reduce the immediate pressure to tighten rates. Is he going to lean into the market relief or hold a hard line on inflation? It's going to be fascinating.
All right, Part 4, spotlight on Indian markets, acting as a local ground zero.
While we wait on the Fed, let's pan our digital trading floor over to the local epicenter of these global tailwinds, India. Looking out at the futuristic Mumbai skyline from the studio today, we saw a brilliantly broad rally. The Nifty 50 pushed right up near 23,900, while the Sensex stacked on over 300 points. The market breadth was overwhelmingly green, with advances just crushing declines. This surge was massively propelled by the IT and FMCG sectors, totally absorbing a 2% drag from metal stocks, where companies like Vedanta actually hit their maximum daily drop limits and got locked in lower circuits. Okay, so we know what happened today. Let's see what's next.
That brings us to Part 5, Technical Trends to Watch, where we chart the forecast.
Now, it's one thing to know what the market did today, But it's a whole other ballgame to project exactly where these indices are going tomorrow. These Sharecon Eagle Eye charts for the Nifty and Sensex brilliantly illustrate the exact momentum we're tracking. Look closely. You can clearly see a falling trend line breakout. After a gap-up opening, the Nifty breached its resistance line with a gap, which is a massively strong signal for the bulls. The lower end of that gap now sits as a critical support zone right at 23,645. The technical consensus here, any pullback toward that zone is essentially a prime opportunity to accumulate.
I really want you to lock in these actionable targets on the data panel. If the Nifty pushes past that near-term resistance of 24,100, the short-term target opens wide up to 24,500. For the Sensex, we're targeting 78,400 in the short term. And definitely keep a close eye on the Bank Nifty. It recently tested highs and saw a bit of profit booking, sure, but if it breaks past that 57,400 resistance zone, it could open up some very serious upside possibilities.
Which leaves us with the ultimate question as we wrap up this explainer. With global oil preparing to flow again, Japanese rates making 30-year historic shifts, and a brand new Fed chair holding the reins, are we witnessing the explosive start of a brand new macroeconomic supercycle? Or is this just a massive temporary relief rally before inflation bites back? Keep your eyes locked on those charts and watch the central banks closely. Thanks so much for joining me on the trading floor today, and I'll catch you at the next opening bell.